Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for October 19th, 2022. We'll start with the sniper trade of the day. So this is Alcoa in 3 minutes, 3-minute charts. Here was yesterday's close. Here was a gap up. This is the opening range 3, that first 3-minute bar. It then rolls over, ticks us right here into the position. We take a standard risk box. We're hoping to see it get to the close, and then if that breaks, we would take a second position with a collapsing dragon on the break of that support. So let's see what we get. We get a reasonable move down. It comes through the dragon, hits the PSAR with price, starts reversing higher. So we go ahead and take the exit here, and we make about a 0.7. It then rolls over and resumes the downward trend, so we get short again. Again, take our standard risk box. Still hoping to see it break below. We get a reversal against us. So instead of failing, it reverses against us. So we take the exit here, and that is about a minus 0.7. So now we're flat. It rolls over immediately, falls through the same price level. So we just get short again, reconstitute our risk box. Still ready to take it short, looking for it to get to this support level at the PSAR, where we would still consider adding the second position. It does fail. I considered adding the second position. I had some other things going on and span of control issues. So this was a place on this little breakdown right here that a second position could have been played. If you had done that, then upon failure to fail further, you should exit here so that is a scratch. I take the exit at the edge of the dragon right here. So we lock in this gain. That's about 1R compared to the risk box. So now we're back to +1 for the day. I'm eyeballing that PSAR. It starts to fail. I take the second entry short here. This is now when this rolls over and crosses the baby dragon, and then the RL10 comes through the bottom of the dragon. I take this as a collapsing dragon, because here's the belly of the dragon. I just go ahead and take that. Now we also have a high, a lower high, a second lower high. So we can also consider this a Kata 2. If you had waited for the violation of the RL10, that would also be a CD. We are willing to take a violation of the bottom of the dragon or the bottom of the RL10 with the standard pattern of a collapsing dragon. But in this case, because you've got that cascading lower highs, it's a Kata 2, that this is really justified early. You could even think about adding that second position here anyway, because you're now below yesterday's lows, and this is all new territory. And this is that would be a rejection of yesterday's price. At this point, we're still holding. Here's our 1 unit of risk, and now we're holding that's about 1 hour in hand. So you don't really want this reversal to go any higher than that. So I'm fine with you taking an exit right here or waiting to see that here. I don't know that I want to wait for the PSAR to come all the way down because I might lose some of that. So I would like to keep 1R locked in, or maybe just take it right there at the edge of the dragon. That's a quiz for you. Where would you put your stop? You see this little doji printed right here, and it's touching the edge of the dragon, and here's where it's opening. Do you just take that now? Do you wait for the spine of the dragon, skin of the dragon, or the PSAR would be approximately right there? So 1, 2, actually let's go 1, 2, 3, or 4. Do you take it right now? Or do you take an exit at, put your stop at 2, 3, or 4? Any one of those is still going to allow you to be no lose plus dinner for 2, right? Because if you're short from here and you set your stop at 4, you've still locked in about a 0.3 win. 2 would be about a full 1R win. And you're also prepared, no matter what, you've got a re-entry right here, because if you took that exit and then it immediately started to roll over, you would take that re-entry, and what would you call that entry? We would call that a collapsing dragon. That's right. That would be a re-entry. And now, especially if this gets rejected right at the edge of the dragon, like if this just starts rolling over right away, let's say you picked your stop at any of 2, 3, or 4, but price doesn't get up there, and this rolls over, that's a good place to take a second position. But if you do hit 2, 3, or 4, and then it rolls over, you would instantly get short with one position again anyway. Okay, so I see a lot of votes for just get paid at 1. We'll see how that works. So let's see. Here was 1, 2, 3, 4. The main thing that you cannot do on this one, because at this point of maximum excursion, you were holding about 2R in hand, and you've pretty much given back most of 1 already. In fact, this would have been a 1, 2, 3 exit right there. So you're fully justified in taking that at +1. Remember, we're still +1 for the day so far, so that would be your second R. I took the stop at 2, which is just slightly under 1R. If I were to do that again, if I had been paying more attention, I might have looked at this little wiggle right here. This was the opportunity for it to break through this belly here, and it did not. So I should have been able to get out either here or here. That's just sloppy work on my part. I'm fond of that. I don't mind taking that one right now. The edge, when you've got 2R in hand and it comes back and hits the dragon, why not just take it? Why not just take it? Because you know how to re-enter, and you save yourself this little grief. Yeah, and you got to live with yourself. Now, this one is the PSAR exit, and the PSAR flip has hit. This is a legitimate SSC. Because you've seen 3 legs down. 1, 2, 3. And this had almost 15 or 20 minutes of failure to fail and has just hit our little trigger. So you're fully justified in taking that trade. Would you take that trade? I did. Now I want you to notice that that when you draw your standard R10 wrist box around this thing, that your CD is still in place. So you're only risking actually that much of the standard risk. So you're already going to max out at this thing at minus zero point 0.7. You're not going to let it come all the way down here to a 1 hour loss because you already have our most favorite powerful signal for a short anyway. So you've already saved yourself zero point 0.3 of an R. So I take this one. I like the fact that it did not fail below my entry and then gives me that little surge to the upside. I really want to see it get above this before I feel like it's free and clear. So this space in between my entry and this hump of the RL10 is the tactical space. And all I'm going to try to do there is get my stop from here to above no lose plus dinner for two. Now, when I notice this, I say, hey, here's my entry. If I move that stop up now, I can lock in that much. I've had one good surge bar and it hasn't failed. So I feel like I might be able to just right now move my stop to the bottom of the dragon and just lock in this gain right now. By show of hands, would you do that? Why not? So where we are right now in terms of this continuous framing, um, I'm still geared to take a collapsing dragon if it fails through here. I've moved my stop up to here, so I've locked in my no lose plus dinner for two. I've identified a price level where if it gets above here, I would strongly consider a second position, and my target would be the top of the RL10 and the top of the RL10 and the high of the day. On any of those, I could be considering a second position. If I considered a second position here, I'd think about a third position here because now it will have reversed and made a new high. Then all this would have been false, and then the real trend would have been up. So that's a quick view of what's going on. Now, with 3-minute bars, you can do that all day. So that's my sense-making overlay of the price action that I'm seeing here. The most important things really are that PSAR flip, and then these turning points in the RL10. Okay. It doesn't give me joy. It crosses the baby dragon there, the purple line. And as it comes into the dragon, I just take it because I want to make bank on this little. I'm in a bear volatile mood, right? So I'm going to just simply take my little no lose plus dinner for two, which is about a 0.3. So I'm plus 1, plus 2, plus 2. So I'm at 2.3 now. I'm justified in considering a short position in here because we still have this series of um, cascading highs. But because I've got this one paid, I'm willing to give it a little bit more risk, a little more chance. It reverses in my favor to the upside again. So I just get right back in with a COT of 2. Standard risk box, it basically scratches. It gives me another COT of 2. So now what I'm seeing is a intraday reversal with these higher lows. And now the PSAR flip. And as I see that, right, I'm noticing that that's where the PSAR flip occurs. So even though I've drawn my risk box like this, I'm really only taking that much risk because this signal here would get me out. So I'm only risking about half of an R, half of a standard risk box anyway. Come on, boys. Finger biting. I take the PSAR flip exit. You know, it tried mightily, but it just could not break that hump. And now this little consolidation zone is making this a really interesting moment in the trade because you had this big move down, half a move retracement. So if I made that like the high and the low, this is about the 50-yard line right here. And that's where you're getting that nice tight breakout. So I could take my standard risk box and simply draw that around price and say, you know what, I would be willing to get long like right about there or short right about there. And you just tell me which way you want to go. And what I would do is, on the breakout, I would just take half of that box and say, look, if this broke down this way, I would take the short and then use the halfway point and only risk half of an R. But also, if it broke out now to the upside, I would just bisect that square and take half the R. So I'm only genuinely risking a 0.5 loss. Check or hold. That's an advanced hybrid technique, that Z3 pinch. There's the breakdown. There's my standard risk. I get about a quarter. I do the stop and reverse because I'm still seeing this this move up. Kind of as a lazy K2. But I'm really only risking this much of that box because that's going to be my signal to get short. Especially if this rolled over right away, because then I would have a high and a lower high. And so this would be a K2, or a K2 would be in here. This would be the CD. Another fractional. Boy, this is heavy sledding right now. So I take that one as the short. We're in a bear volatile. This thing had 45 minutes to break out, and it couldn't. The next surge was down. It consolidates a little bit, but then it breaks down faster, and this is a lower high. So I take it, hold my nose and take it, and this thing drops like a rock. I don't mind if you get paid in here. Any one of those 3 points would have been a legit exit to just get the payoff from that move. Would not be offended by that. If you did, then you've got to be prepared to re-enter short here. I just was playing one move one position, it reversed, and I took the exit at the skin of the dragon. So that one's pretty nice. Here's our 1 unit of risk. So there's one, that's about a +2 units of reward. So when this reverses and comes back up, I just cut it right at the, like a 1, 2, 3 exit or at the skin of the dragon for 2. So now we're looking pretty good. I missed the PSAR flip. This was an indication with a standard risk box like that. I just missed that trade. Was not in the zero state. I missed that short. At worst, this should have scratched. Then the short, that's the one I should have had, because this is reinforcing the downward move, and I expect to get it here, and then I should be adding a position there. So that's 2 in a row I missed. And it took us right into the end of the day. This was the last hour, so I was kind of good to go on that. Wasn't all that hungry. So when we total that all up, we got half, lost a half, gained 1, 2, fraction. So there's probably another 1 in there. So we're about +3 by this point. You get a fraction, that's about 0.5 between them. And then this one gives you 2. So that's about 5.5 the hard way, with a lot of cutting and thrusting in there. So sniper trade of the day in Alcoa, and flat overnight. All right, next up, let's see. So this is our 30-minute chart, or tactical chart. Here was the gap up. Oh, no, that was yesterday's gap up and then sell off. Today opened pretty same location, sold off in the S&P, and then came halfway back to close poorly at 368. It could not break out of the PSARD, so the trend feels down. That's not a strong move. On the daily bars, it could not stay above the PSAR, so this feels like a resistance level. So instantly, if it goes below today's low, that's a strong signal to short. Here's a second position, strong short. Here's a third position, short. But if it's able to reverse and get back above, I really want to see it get above today's high. So I would treat today's box kind of as I should make that the yellow zone. So if it breaks out, I'm long. If it breaks down, I'm short. Standard work. And we're reminded that on the 150-day look back, we're just monkeying around in the bottom 20% of the long-term move. This is Godzilla territory, and any breakdown below 360 is massively short. It's a grinding move to the 30-day high at 410. But that's a long haul. That's a long move. It's got to get above this, and then 380, 390, 400. So these are the $10 price increments on the way up. Got a lot of work to do for this market to heal. Let's look at the sectors. The S&P, our baseline, was down 0.71. The Qs and the diamonds were not quite as bad at minus 0.36. The Russell was down 1.7. That's a kick in the teeth. Emerging markets were even worse at 1.8. Treasuries still bad at minus 1.8. Now it's halfway down to 90, closing at 96 and a half. All right, let's look at the underperformers today. These are the ones that we would be prepared to short instantly if there's weakness tomorrow. So baseline S&P here. You got the Aussie dollar, consumer discretionary materials, finance, uranium, lumber, the other lumber. Now we're down to minus 1.88. So that's between 0.7, 0.88. Clean energy, wheat and precious metals, residential real estate, all at between 2.25 and 2.5. You got ARC Innovation getting smashed, minus 4.3. Biotech 4.9. ARC Genomics 5.7. So lots of sectors to share the weakness tomorrow. Individual companies, Squarespace off 5.8. There's our Alcoa. We found the mover essentially at minus 5.33%. Coinbase weak at 4.5%. Robinhood U.S. Steel 3%, 2.5%. Cliff. So there's our three metals. There's Cliff, U.S. Steel, and Alcoa. That's all our metals. All much worse than the S&P. All much worse than the materials sector. That's real weakness in the metals. So my orientation is down. If it goes down, I will pile on the short. But they have fallen far enough that there's a potential for a bump to the upside. So we know that they're in play right now. That's why we like them. Other companies, there's Microsoft and PayPal, minus 0.9 and minus 0.8. So a lot to choose from on the weak side for tomorrow. To the upside, again, baseline S&P, minus 0.7. So there's commercial real estate, Mexico, consumer staples between minus 0.6 and 0.4. There is tech, agriculture, the FANGs, blended commodities, Bitcoin between flat and minus 0.3. And here's the cutoff line between winning and losing for the day. It starts with lithium, Ethereum, Brazil. So lithium and Ethereum, 0.2 and 0.24. Brazil, 0.56. The VIX up 0.78. Marijuana, 1.75. Oil and oil exploration, 2.5 and 1.95. So energy was strong today. Tesla had a reasonable showing on a down day at 0.84, holding above 220. Here's Texas Instruments and NVIDIA at 0.75. So there's two of our semiconductors. And here's Intel at 0.5. So semis are strong. Metals are weak for tomorrow. There's Apple just basically breaking even, which is not bad on a day when it's better than the Qs and the tech in the S&P. And then finally, Rivian was a little better than the market, but still lost 0.44. Let's see. All right, let's go to the traders. All right, so we're going to go find all the posted trades in the chat room for people to review and comment on. We'll start with Constantine, our prop trader. He notices this confluence of price action from the previous day, and it closed poorly, and it opens. He gets the PSAR flip, gets his standard entry. This thing runs up, pulls back, doesn't penetrate the dragon, and resumes again, starts to fail once more a second time. So he just says, you know what, that's pretty good. I'll take my exit at 4R in 20 minutes. That's how you do that. Nicely done. Nolan working on his techniques here. So that those higher lows makes this like a kata 2. That's I suppose that's okay for a scratch. If you're going to do that, I'd like to see you get in sooner. But on the first move, you know, you could afford the bottom of the dragon, you know. But this is a good reentry and got paid, and that pays for that at 1.4. So that's reasonable. Now on this one, when you get such a nice move, if you had still been in here, a 1, 2, 3 exit would get you out here. This is a place where I would consider getting short because it has come through the dragon. It's broken through the VWAP. Here's your PSAR flip. So either here or here, that's a tradable move, and that's enough to catch it at the edge of the dragon. All right. This is the Aussie dollar on the fives. This would have been really tempting to me. Penetrated, rejected at the VWAP, breaks through the dragon either here or here. Strikes me as a shortable move with an exit somewhere around in here. I'd probably have then taken that. This collapsing dragon, I would like to see you take that as a kata 2 right here because you have a high and a lower high, and it's already below the VWAP, so you can take that with a risk box here, and then you would get paid. And then the worst thing is you get scratched, but you should be able to cash a winning trade somewhere in there. This is a nice quick scratch. No, that's a kata 2. I don't know that that's a mistake. I would like to see you re-enter, scratch, and re-enter, and then get paid. And then here's the one you want. That's the PSAR flip, standard risk box, crosses the dragon, crosses the VWAP, does the PSAR flip, smash that. Then your CD is your second entry, and then when you're this far to the advanced line, that makes that a great exit. You got to smash that. It's failing right at the same level that it failed before, and it's on the south side of the VWAP. That's what you want. The DAX, that's a great short. I love this long, but man, when this doesn't work, this is supposed to go to the VWAP. If it doesn't, cut it because you're in a downward trend, and then take that short there, smash it, take it. Now here's an SSC. If you don't take that, then the kata 2 is just right. And then money management, figure out what your maximum favorable excursion was. But that's still a pretty good trade. And then I think I'd be short here. It's below the VWAP. It made a lower high. Smash. Then that's a good exit. You still get paid. Smash this short, you get paid. Either here or here, smash it short. Good analysis of different exit strategies as you're resolving which ones. I would also take a look at you might segregate these by target, because I think you'll see there might be a difference in performance and feeling between the DAX and the Aussie dollar, stocks versus currencies. I can't remember the last time Luke had a losing day, but we're going to look at this one and say PSAR flip, PSAR flip, Kata 2. All those wiggles are failures to fail. So I love this with an exit here. I don't mind this exit for a quick scratch. I probably would have ended up scratching the second entry. Yeah, just unfortunate. Good short. I think we gave back a lot here, especially with a couple micro losses there. Slow to capture that. And then this one. Oh, my gracious. Man, you got to smash that short. And then scratch it and then smash it again. Oof, long side bias. Eliminate the bias. Here's 2.1 for Arch. This is a good loss. I'd like to see you short there, though. And then a PSAR flip there, and a PSAR flip there. Those are all paying off. But you done real good here. I want to see you get the second position short when you see that shelf, and it can't break through the PSAR but fails, and you got 2R in hand already. Smash, and then exit at the edge of the dragon instead up in here because you're on 2 positions. So that 2.3 might have been 5 or 6 today. Okay. Good work in there. All right, here's a couple from my brother on the standard sniper. Crosses the dragon PSAR flip. He's long here. Here's his automatic 2R battle drill. He considered it. Span of control. So he didn't take it. Takes the exit right at the edge of the dragon as it's crossing the baby dragon for 2.3. Perfectly played. PSAR flip, standard entry. Takes a second entry, Kata 2. It was looking to double up, I think, again. A little premature maybe, but gets all out, gets short, tries the second position, covers, tries the second short. This is not a stop and reverse, I don't think. He's now stalking, crossing the VWAP. I think he waits for the PSAR flip, gets the entry now that it's clear of all this crap. It starts to reverse quickly, so he just cuts it 1.1 for the day total. I think a little premature here, and but I like the efforts. I like this effort to get that second position in here on the view, because if this fails, that's a massively good trade. But quick exit at the VWAP is good. And I like the re-entry and then the quick cut at the edge of the trade. Those are all good. So 1.1 for the day. He had 3R and McDonald's and 3 in Devon Energy, which we'll take a look tomorrow. So it was 1.1 out of these, plus an additional 6. We'll analyze those tomorrow. All right. We'll take a look at the daily. Come on, dummy. All right, we're going to go to dashboard 1. Sorry, there we go. We are still in bearish volatile and haven't really been able to break to the upside. And we're pushing over bought and, again, rolling over. The risk Z is warning us of potential breakout large moves from this compound critical state, so be on your best behavior and no overnight risk. Tesla, Alcoa, and Intel all on the max pains, so I'm ready to smash them to the short side. Whoops. Let's get to the... Sorry about that. Just a moment. All right. Dow 30. Lots of dojis for small intraday ranges today. Breakouts to the upside in Chevron because of the strength in energy. McDonald's a nice play to the upside, bucking the trend. And Travelers had a great big breakout as well. So those are key leaders, given the fact that the market is so weak. Only a handful, 3 auto framers in Intel, Microsoft, and Tesla. Intel is especially intriguing at 2.3 to 1. It was a doji today. The semis were strong, so let's be ready for that one tomorrow. I'm watching all the semis. ETF tactical. Breakdown in treasuries, just miserable. Breakout to the upside in energy. A little breakdown in gold. A lot more auto framers because all of these internationals had fallen farther than the U.S. But there's 7.5 to 1 in silver. So we should be watching wheat and precious metals tomorrow. A handful of auto framers. Tesla, need I say more? Intel, Tech, Microsoft, those are the ones we want to see tomorrow. All better than 2 to 1 reward to risk ratio. Here's all your mechanical trade framing data for swing trading one day at a time. Just a couple squeezes, and Tesla's the top one. Boy, is that going to move tomorrow. And if McDonald's worked today, and it did, it's pretty much on a squeeze at 2 to 1. So let's be ready for that. I like how squeezy Intel is as well. So we got a handful of good ones to watch for tomorrow. A few Godzillas that are in a double green condition. And some of the stealthy Godzillas ready to go. That's Advanced Micro Devices and Newmont Mining. Both of those could be very good tomorrow. Note to self, get ready to trade those tomorrow. Here's your R10 for intraday trading, 43 cents and 16 cents for Advanced Micro and Newmont Mining. All the precious metals are postured, and Newmont Mining is strongly connected to that. And AMD closely connected to the semis, and they were strong, so that could be a Godzilla ready to break out. In the tacticals, Squarespace and Ethereum, you know, double double quiet Godzilla, King of the Monsters. All right. Let's see. In the S&P standouts here, the one-day movers. I like looking at those ones that made the largest statistically significant move. Everything better than 2 to 1 is automatically of interest to me. Again, you can see all their R10 for intraday trade boxes. And really anything better than one sigma gets color coded. These two are interesting because the 5-day has been so quiet, and yet today was the first day big breakout. Don't be surprised to see those go. All right, so we've got, again, just standard auto framer stats for all of our tactical set, and the sniper stats for the tactical set. And again, I really like things that are 5-day volatile, but very, very quiet today. Be very, very quiet, hunting rabbits. So Diamond's in a really interesting posture. Microsoft, Tech. That's just waiting to explode to the upside. That's what that is. That would surprise more people than anything. So I will be ready for that. In the multi-time frame NDX look, we got energy plus McDonald's. That's where your strength is. Energy and oil exploration. That is such a standout. And then Brazil is just kind of stealthy, getting it done as well. Brazil and Latin America. That's how you read that. And then big weakness, gold, treasury, silver, blockchain. That's why Newmont Mining is so interesting to me. Is a Godzilla ready to go. Watching this little resistance area with interest, had the harsh sell-off, huge one-day move, and it's had a little follow-through, but some weakness starting to creep in. Again, if it gets below 350, though, look out below. All right, that's everything I wanted to cover tonight, with one last little bonus. Hat tip to Tim. Doing good work on his exit management. He asked, hey, what should I do about my exits? I said, you should study them, and gave him a little guidance. So he did. My advice to him was to do the work, back test the different mechanical exits on his given trades. And his real insight came after he reflected on how the exit strategies felt and what was going on inside him when he was applying it. And he realized that the pure PSAR suits him best, and not the MMRB trailing stop, because that's a little too tight, and that drives him to take money off the table too quickly because the box is smaller. And as he reflected on the combination of mechanical exits and the cognitive exits, he became really calm and mindful for the day, and he felt synchronized with the market, and that's exactly what he wants in order to be able to capitalize on the movements. Hat tip to him and Constantine for their collaboration and accountability partnership. He is becoming more mindful to help him differentiate between normal trending behavior, accelerated impulsive moves, and consolidating from directional phases. So he's really identifying three characteristic kinds of market moves, which is helping him distinguish between which exit strategy feels correct. So he's developing a craftsman's touch on interpreting price moves. So, for instance, he thinks of a normal directional trending mechanical trend following exit strategies like PSAR should work when it's normal directional trending. Accelerated directional moves he's thinking of as sharp accelerated moves, and in that case he wants to accelerate the profit preservation because it may not sustain that kind of aggressive move. So maybe something like 2-bar highs or lows. The non-directional phases, he is now, where there's more failures, he's looking at getting out early or giving him less room to prove so that he's not getting chopped as much. And so now he also recognizes the strong psychological benefit of moving to no lose plus dinner for two and making the trade a science project in order to be disinterested. So a great exercise, in his opinion, gave him a lot of experience and clarity. He's provided the bar-by-bar back test, which I think we'll probably just put in the chat room. And thanking me for coaching and support. Hey, you're doing the work, bud. It's our gratitude to you for doing that work in public and helping us with the load that you're carrying for us. So many thanks. All right, that's everything I got for today. We'll get this published and posted, and we shall be ready for them tomorrow. Semiconductors, the metals, compound critical state in the market, bear volatile market. This is a trader's delight. Take good care. See you tomorrow.